looking for shorts. Here's a short right here at 52.65, came right down to target. This is a trailing trade over top of the 4 profit line. You can use whatever profit line that you choose. All right, just make sure you've done some back testing and it makes sense to you. Why using the profit line makes not only sense to me, but also makes me money is because what gets you into these trades is the profit line is turning red for a short. Right, we're in this level here, but the big key is the turn in the profit line. Right, so the variable that got me into this short trade is going to be a red profit line. Well, price is below that, right? So when is that voided? When are the variables for this trade no longer present? When price starts trading above it, right? When it starts going green. Now you can get out on spikes, and that's what's going to happen with the pound US. A little poke up through the profit line. Now I had to do +2 plus a spread. It really didn't save me anything. It got me out actually. So every time we stair step down, every time we flatline, just take a look at the profit line. In this instance, it is 52. Oh, try this again. It's 52.66 +2 plus a spread. All the way down, all the way down, all the way down. By now here our euro yen trade is coming out for profit. This line here was where my stop ended up and didn't move past this. And watch what happens here. I'll just do this in candle by candle here. It's a lot of sideways chopping around, right? There's that poke out and then falls back in. All right, now I'm not too sure where we are right now. Well, we're still going sideways here. So, that was an extra +33. But remember, this is only a +33 in a portion of my full position, right? Because I scale out. I want to scale out and bank some profit, keep a smoother equity curve. But I also want to be on board, when the inevitable trend is going to happen. The extended moves are going to happen, right? Minimize my risk, right? Minimize my risk by adjusting my stops, minimize my risk by scaling out, and this whole trailing down is a free trade because once I get to my 2x, my full target, I'm going to break even. Once I'm here, this is a break even trade. At worst case, I'm not going to lose anything on this trade, right? Break even plus spread, usually 2 pips is what I do. So it might cost me a little bit, depends how the markets, the spreads are working, and that's basically what I do, and it's it's done okay. I can't complain, and because you do get those extended moves from time to time, and they more than make up for the the partial. I'm not going to say partial loss. I guess the break even, and sometimes you will make an extra pip on those. But so I want to bring up. Let me bring up the sheet here, so you can just take a look at something. First, here's the look at the euro yen on my data chart, and you can see what happened here. Here's where I shorted the market, right here. This is where I was looking to scale out on the euro yen on that first trade there. This is where it took me out. It took me out at 112.90, and the high on this candle was 112.90. So that's a bit of a drag when that happens. And in a second, I'm going to look back at the chart and just see if there's anything I could have done differently in this trade. Okay, and then here's the second portion. As you can see, it's just the full in here, the full out here, and the market's just kind of going sideways. All right, so I'm going to bring up the chart in a second just to see what we could have done differently in this area. Let's just take a quick look at the pound US. This is the short area right here. Here was the first target where I want to buy back a portion of my position, and you can see what happens right here. This little arrow indicating a buy from the short, taking out part of my position. And then where's the final exit? It's going to be right there. There's a final exit right there. So that's what that is. Like I said, let's look at the euro yen chart one more time just to see if there's anything we could have done differently in that area. All right, well, let's take a quick look at this. What do we got? We've got the trade here, original stop there, right? Just above the profit line. That's good news. We've got the early exits printed in, right? Now you can tell by my loss, I didn't move my stop. What I could have done in hindsight is moved it down. I still would have got taken out of this trade. The stop was at 90. I bumped up to 91. Would it really mattered? The high on this candle was 91. Well, maybe just around that level of 90. But then I'm running into, the big round number of 113. There's a swing high over here. So there was a few things. What are you going to do? And then we're getting into a long here. So I guess, in hindsight, I could have gone around the 90-ish level, but then it brings me closer to this level here, and would I want to bump it up around there? Here was the early exit, to cut our risk, right? That's when we went, risk. It's so key with, if you're not taking care of your risk, you're not going to have any funds left in your account. So you know what? Overall, maybe a slight adjustment in hindsight. Money risking 2%. I had a chance to reduce my risk. I didn't. Even if I did, I could have moved it just around the profit line here. So all in all, this was going to be a loser trade. We talked earlier about what gets you out of a trade, and it's when the variable that got you in the trade no longer exists, and this is what you see right here. So you know what? All in all, I can sleep tonight, looking at this trade. The market was doing what it was doing. It was slopping around sideways, from 8:30 to 9:43. Like who would have seen this coming? I wouldn't have. And I didn't. I got out of minus 23. All right, let's take a quick look at this notepad little thing I put together here. All right, let's make this a little bit bigger. And this is where size of your account really makes a difference. Okay, let's say you're trading a $10,000 account. And you're looking at about a 20-odd pip risk, $200 you can risk per trade. Divide that into the risk of 21-ish. You're looking at about 9 mini lots you can trade, $1 a piece, roughly. Bump that down to, well, if you're going to scale out, you want to split out half. What's half of 9 is 4.5. So make it easy, go down to 8, right? So now you're got 4 positions to 4 position on the first out and 4 positions to trail. And what that's done already by